Hi everyone. In this video, I'm going to introduce you to the concept of the journal entry, which is the second step in the accounting cycle. All right, so first up, the journal and journal entries. So when you hear me say the journal or you hear me say journal entries, what am I referring to? Well, let's start with journal entries. Journal entries is the literal recording of economic transactions. So some sort of activity occurs, you convert it into accounting language, which is the language of debits and credits. So if you're not yet familiar with debits and credits, make sure you shore up your knowledge on that before you follow this video. And so we take our economic transactions, we determine the components, we determine the values, we determine the debits and credits, and the journal entry is simply where we enter that information into our system. The collection of journal entries is known as the journal. Okay? So, as I said, this is the second step of the accounting cycle after you have analyzed an economic transaction. It is maintained in chronological order. So whatever happens on, say, January 1 will show up first. If something happens on January 2nd, that'll show up second, so forth and so on. The process of recording the journal entry is called journalizing. So we say we journalize the activity. That means that we are making a journal entry in the journal. Okay? And here's the key. Journal entries will include the following information: the date of the transaction, that's to help keep it in chronological order; the accounts that were affected by the transaction. Remember, there should be at least 2 accounts affected by any transaction. The valuations. This is accounting. We have to keep track of the value of those accounts. And of course, the allocation between what was debited and what was credited. In other words, telling us what went up, what went down. So let's take a look at a few examples of journalizing economic activity. Here we have on October 1st, FlyerCorp issued common stock for $40,000 cash. So notice, here is my journal, or at least a clip of the journal. I have a column where I have the date, October 1st. I have the accounts impacted. So in this case, FlyerCorp issued some common stock to investors. So common stock is going up. And they received some cash from those investors. So cash is going up. In this case, cash is an asset increasing. Debits increase assets. And when you're in a journal entry, debits go first. So we're going to list cash first. And we're going to show it in the debit column for $40,000. Common stock, that is a shareholder's equity account. When shareholders' equity goes up, that's a credit. And credits always go second. So credits second. And so here you see common stock listed, and you see in the credit column 40,000. Now some interesting things to point out. The credit is indented. So notice debit to the left, credit to the right. You don't even have to look at the amounts and what column the debit or credit was put in. You can just look at this and you know which one was debit, which one was credit, by whether or not they are left aligned or indented a little bit to the right. Also notice debits and credits equal each other. Every journal entry must have equality in debits and credits in order to hold the accounting equation in balance. A equals L plus SE. In this case, A up, SE up. All right, let's look at another one. On October 2nd, FlyerCorp purchased 10,000 of inventory on account. So inventory is an asset going up. So we're going to put our date. We're going to list inventory first because when an asset goes up, that's a debit to inventory for $10,000. On account is the phrase we use when you have bought something and you agree to pay for it later. In other words, you have a debt in the course of business, a payable. And when we say on account, what we're really referring to is accounts payable. And so that is a liability that is going up because we now owe for this thing. And so it goes second as our credit, indented a little bit to the right, credit 10,000, debits and credits are equal, A up, L up, A equals L plus SE is in balance. Let's look at one more. On October 5th, FlyerCorp purchased equipment by paying $15,000 cash upfront and writing a $60,000 note. Now, this one's interesting because we're going to introduce the idea of 3 lines, and it doesn't have to be 3. It could be 4, 5, 6. Journal entries have to have a minimum of 2 lines because you need at least 1 debit and at least 1 credit. And your debits and credits have to be equal to each other. However, you can have more than 2 lines as long as debits and credits still equal each other. So in this case, we purchased equipment. Equipment is an asset that's going up because we're receiving the equipment. And specifically, we paid for that $15,000 in cash. So cash is also an asset, but in this case, asset down. And we did what's called writing a note. Writing a note means we signed a promissory note to pay later. This is how most auto loans are structured. This is how student loans are structured. You write a note saying you're going to agree to pay later. And so that right there, a payment later, that is a liability that is going up. So when we think of this in terms of debits and credits, we have one asset going up. That's a debit. We have another asset going down. When assets go down, that's a credit. And we have a liability going up. That is a credit. Now, first asset, or I should say first thing, date, October 5th. Next thing, the first piece of the journal entry, our debit, right? Debit's first. We have a piece of equipment going up. That's our debit. It's to the left aligned. And how much is it worth? Well, we paid $15,000 up front and we agreed to pay $60,000 more later, so it's worth $75,000. That's our debit to equipment. Equipment up, $75,000. Asset down, cash, that's a credit. So we are going to indent that to the right slightly, $15,000 credit. And we had a liability going up that is also a credit. We indent that to the right slightly, $60,000. You may notice, even though in the problem, cash came first, liability came second, we put them in order of magnitude. So because the note was bigger than the cash, we listed it first within the credit section. We listed the cash second. And the same would apply to debits. If you have multiple debits, the biggest one goes first, the smaller one goes second. When we collect all of those transactions together, so here they are in chronological order, we have what's called the journal, also tends to be referred to as the general journal. So notice it just lists every single transaction that occurred in chronological order with all their debits and credits. And an interesting thing here is because every transaction had equal debits and credits, grand total, if we tally all of this up, debits and credits should also be equal as well in the journal as a whole. All right, so what are the benefits to doing this? Why do we maintain a journal? Why do we take our economic activity, convert it into accounting terms, and put it in this chronological list? Well, there's a few different reasons. One, the journal entry itself captures the complete impact of an economic transaction. Now, what do I mean by that? Well, let's take a look. Look at this journal. Let's say I had never given you the information of what went into these journal entries. I could look at this journal and I could say, hey, cash got debited $40,000, common stock got credited $40,000. That tells me that cash went up because stock went up. Therefore, we must have issued stock to get cash. I don't need words beyond account names and debits and credits to know exactly what happened in that transaction. Look at the last one that we did. I see debit equipment, $75,000. Okay, we have a piece of equipment worth $75,000 that we didn't have before. Why do we have it? Well, we gave up $15,000 in cash, and now we owe someone $60,000. So we financed part of it, we paid part of it up front, we now have equipment. You can look at a journal entry and you can see exactly what transpired on any given day. And you can see the order that the events occurred in. So that's our second bullet there. The journal keeps track of the order in which economic activity occurred because that carries its own level of information to it. And then lastly, as I mentioned on that last slide with the journal, it's your first line of defense against errors because you can add up your debits, you can add up your credits, and they should be equal. And if they're not, you know you've got a mistake, and you can then try to hunt that mistake down. So kind of a first line of defense against mistakes. All right, that is it for journal entries and the journal in which they go. I hope you found this helpful. Hope you join me for another video.